China is forging its own path in the cryptocurrency world. The successful implementation of the Chinese digital currency model would limit the United States' ability to impose sanctions and blockades. People all over the world witnessed a significant drop in the market for Bitcoin and other cryptocurrencies in mid-May 2021. This precipitous drop was interpreted as a reaction to China's most recent crackdown. The People's Bank of China, PBOC, has taken this step to emphasize the importance of orienting its actions towards financial and investment stability. The move comes at a time when the world is experiencing widespread economic insecurity as a result of the ongoing coronavirus pandemic. All of this has led to an increase in geopolitical tensions and commodity prices. The recent actions came at a time when the market for various cryptocurrencies was on a roll. For some time now, cryptocurrencies have shown unstoppable growth. For example, the value of Bitcoin has increased by more than 300% in the last year. Such growth patterns point to the formation of a bubble, which could make commodity markets more volatile. Chinese regulators' measures to restrict crypto activity sparked a global sell-off of digital assets, resulting in a price drop. This is not, however, the first time China has attempted to regulate its domestic cryptocurrency market. For the past few years, China's relationship with cryptocurrency has evolved gradually. China, the world's most populous country, has also grown to become one of the most important cryptocurrency mining hubs. According to some estimates, the Chinese account for 2/3 of global production in crypto mining. Despite such a large market share, the Chinese government appears to be opposed to the rising popularity of these currencies. The various containment measures implemented by Chinese authorities, first in 2013, then in 2017, and now in 2021, are evidence of efforts to restrict the services of these assets through tighter regulations. In China, there are regulations against cryptocurrencies. Before delving into the legalities, it is important to note that China does not recognize cryptocurrencies as legal tender. As a result, it is not accepted by the banking system or any other transaction. The first regulations were issued in 2013, when digital currency was still in its infancy. The government defined Bitcoin as a virtual commodity in its 2013 regulations. It had made it possible for individuals to freely participate in the online trading of these commodities. Within a year, however, several financial regulators, including the PBOC, barred banks and other payment companies from providing any services related to these currencies. In September 2017, China again imposed a ban on initial coin offerings, ICOs. The trading platforms were prohibited from converting legal tender into cryptocurrencies and vice versa under the rules. As a result, several cryptocurrency trading platforms have either shut down or relocated offshore. According to the PBOC, 88 virtual currency trading platforms and 85 ICO platforms had already exited the market by 2018. The recent ban was a reiteration of the 2017 measures that barred banks and online payment companies from providing any crypto-related services. A new measure, however, was the inclusion of institutions within the scope of restrictive regulations. The PBOC has directed various institutions not to accept virtual currencies or use them as a means of payment or settlement under the new policy measures. Institutions cannot also provide exchange services between cryptocurrencies and the yuan or other foreign currencies. Furthermore, the institutions are prohibited from providing trust or pledging services or from issuing crypto-related financial products. China's blockchain management strategy. Looking at the various restrictive measures imposed by the Chinese authorities, it appears that China is wary of cryptocurrency. This is not the case, as China appears to have embraced blockchain technology and is actively working to achieve global dominance in both blockchain technology and cryptocurrencies. As long as these technologies can be controlled, China appears to be tolerant of them. This approach contradicts the original concept of blockchain, which is envisioned as a rigid system resistant to any form of government intervention. China is developing a blockchain technology that it can control on its own. It employs two prongs for this purpose: a blockchain-based service network (BSN) framework for building enterprise blockchain products, and a digital yuan, which is China's central bank's digital currency. The BSN was launched less than a year after President Xi declared blockchain technology to be a national priority. It was backed by the State Information Center, China Mobile, China Union Pay, and Red Date Technology, which oversees the national network's development and operation. One of the most important aspects of blockchain technology is the ability to use smart contracts. As a result, there is always the possibility of people posting content on the network that is contrary to the interests of the Chinese government. To address these issues, China has developed a blockchain system that can be controlled by the authorities via a process known as Open Permissioned Service. The service in this case is a hybrid of several permissioned and permissionless approaches aimed at controlling the entire network's activities. Another distinguishing feature of the service that is available to Chinese users is that it does not support cryptocurrency. This means that when a user is required to pay a transaction fee, they cannot do so with blockchain tokens but must instead use fiat. This is accomplished by interconnecting the traditional payment system with public chain infrastructure. As a result, if someone needs to pay for something, they must go to a specific portal and enter their wallets. These wallets can only be refilled with real money. As a result, the entire system is still regulated and under the authority of the authorities. Furthermore, BSN is designed in such a way that it can halt any smart contract that violates Chinese law. The Yuan Digital. The digital yuan is a central bank digital currency, CBDC, that is primarily intended to replace cash in circulation. This digital currency concept will not rely on blockchain technology, as do other cryptocurrencies. The PBOC intends to distribute digital currency to users through commercial banks. Unlike cryptocurrencies, the Chinese concept of digital currency preserves the traditional role of banks. Bitcoin, for example, employs distributed ledger technology, which allows transactions to be validated without the involvement of banks. This is regarded as a significant distinction between the Chinese use of digital currency. The push for widespread adoption of the digital yuan is seen as another method of state control, as it will provide greater visibility into money flow in China's economy. The successful application would also aid in the tracking of illicit funds while providing an opportunity to experiment with monetary policy. Hainan is a South Chinese province that has been designated as a blockchain pilot zone. The tests were carried out from April 12 to April 25, 2021, with the goal of advancing blockchain technology. The tests in Hainan are part of the second round of cities to be tested. Shenzhen, Beijing, Suzhou, and Chengdu were among the first batch cities. This is a traditional way for the Chinese government to operate, in which cities or provinces are designated as experimental zones. Because technological advancement has been heavily subsidized by the state, particularly through the active participation of state-owned enterprises, it is regarded as a matter of prestige, and the test is used as a buffer. If the blockchain technology proves to be a revolution in the way that the government intended, it will be rolled out across the country. If the test proves to be a failure, it will be shut down without affecting the country. The results for the rest of the world. China is seen as confidently moving towards taking the lead in blockchain technology, owing to President Xi Jinping's strong support. The road to supremacy in the field has been made easier by two factors. First, the lack of significant competition from other countries or even regions, and second, the domestic push to develop the nascent technology. China has mentioned blockchain technology and digital currency in its 14th five-year plan for 2021 to 2025. In the document, a chapter titled Accelerating Digitalization Development and Building a Digital China discusses the government's plans to strengthen these fields in depth. This is also the first time the term blockchain technology appears in a five-year plan. The plan also outlines China's intention to use blockchain technology in a variety of sectors ranging from fintech to supply chain management and even government affairs. However, the idea is to advance the digital yuan. The successful implementation of the Chinese digital currency model would limit the US's ability to impose sanctions and blockades. The United States currently does this in accordance with the Society for Worldwide Interbank Financial Telecommunication, SWIFT. It is controlled by the United States, which also has the ability to obtain information about SWIFT transactions. Beijing's move is seen as a step towards greater monetary sovereignty. The widespread use of this technology would limit the ability of the United States and other Western powers to influence international transactions, particularly those involving the dollar. This will also allow Chinese entities to conduct business with companies and states sanctioned by the US. The rapid digitalization of Chinese currency, combined with other political and macroeconomic factors, has the potential to accelerate the decline of the US dollar's dominance, both in international transactions and as a reserve currency. The steps taken by China in introducing digital currency technology via its central bank have prompted other central banks to devise similar strategies. The fundamental aspect of anonymity and the decentralized nature of blockchain ledger cryptocurrencies would be eliminated by such a currency, which would be overseen by the central banks of respective countries. The possibility of exerting control in China's approach has prompted several central banks around the world to investigate the prospects of such digital assets. CBDC appears to have piqued the interest of India as well. Over the last decade, the Indian economy has made significant progress in adopting financial technologies. China's growing dominance should serve as a wake-up call for India. The successful application of Chinese CBDC would allow China to strengthen its control over India's neighboring countries. As a result, India should ensure that it does not fall behind in terms of monetary leadership by forging a path into the digital realm. T. Ravi Shankar, Deputy Governor of the Reserve Bank of India, indicated in a July 2021 conference that digital currency would be introduced gradually. If successful, this move would aid India's quest to become a global economic power. In the international arena, China has grown to become the largest country to issue a comprehensive blockchain policy. Aside from China, a few states and territories, such as Switzerland and Gibraltar, have enacted policies to encourage the establishment of blockchain firms. Other countries, however, do not pose a serious threat to China. Even a superpower like the United States is seen trailing China in the field of blockchain technology, where the push is coming from individual companies rather than the state. In fact, these firms have been seen to face regulatory pressure even before the start of their projects. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.